In today's video, I'm going to teach you guys step by step how to save for a house while also teaching you all about the home buying process so you guys can sleep easy at night knowing you've got everything you need to get the deal done. Hey, what's up you guys? Andrew Ferguson here from The Economist, bringing you the best tips and strategies for investing in stocks and real estate. I've been doing this myself for the past 7 years, and I'm on a mission to help as many people as I can do the exact same thing. If this sounds like your kind of thing, consider subscribing to the channel, and let's get you guys educated on how to save for a house. Congratulations guys, first and foremost, for making the decision to purchase a house, or at least you're thinking about purchasing a house. You've probably been online, researching some homes in your area. That's great, that's exciting. Let's get that down payment sorted out so you guys can have it ready to go when you find the house of your dreams. Now the first thing you're going to want to do is track your expenses. Being able to do this will show you all those little hidden expenses that you might not know about. Maybe it's a subscription there, a drink at the bar with your friends here, a coffee here, fast food there. All those little things add up over time, right? We heard the term before, small habits repeated daily can lead to greatness. Well, if they're negative habits and they're repeated daily, it leads to the other way, which is not something you want to be, not something you want to do. So get a spreadsheet going. You can do it on Google Sheets. You can do it in Excel. There's so many apps out there, the Mint app. There's other ones that you can just search in your phone, look up investment or budgeting apps, and go to town with one that feels good for you and that fits your personality and your profile. After you guys cut away the expenses, you guys want to think about potentially upping your income. How do you do this? You can ask for a raise at work. You can generate a side hustle. You can sell stuff online. There's so many different ways you can create more income for yourself if you're just willing to be creative and sacrifice a little bit of your time doing things maybe that you want to do versus grinding down here and actually trying to save for that house. The big premise here is all about delayed gratification. So if you can get that concept in your head that you're doing this now, you're sacrificing now for the bigger payoff later on, that's going to make a world of difference and make the whole saving and making more money part of it so much easier to handle if the whole tracking expenses and generating more income isn't a part of your daily routine right now. Another helpful tip for saving more money and getting that down payment faster is to actually automate your savings. So as soon as you get a paycheck in one day, out the next day into a separate account, there should be some savings going in there. So it's gone right away. It's not there for you to spend on other things at the end of the month. So many people are like, at the end of the month, I don't have the money. I don't know where it went. Well, number one, you're going to be tracking those things now. And number two, that money's going to go into your savings account right away. And then it won't be there for you to spend on other stuff that maybe you were spending on before you started on this journey. The way that works for me, just to give you some insight, is that I have my paycheck going in an account with CIBC, just a regular checking account. The next day, right after, I get it transferred into a Tangerine account, and it's gone out of my CIBC account where all my credit cards and other accounts are. I can't touch it. I can't play with it. It is into Tangerine. It's in a high interest savings account, just gaining 1.5%, 2% maybe at the most. Just away, out of the way, out of sight, out of mind, but it's automatic, so it always happens. I don't have to do any work to do that. You're not making a decision to do that. You're not making a choice between spending and saving. It just happens and it's done. And I got one bonus tip for you guys here. Smash the like button if you're getting value so far though. The bonus tip is that if you guys actually are renting right now, maybe you are, maybe you aren't, but if you're renting, take a mortgage calculator on any kind of site. Go to ratehub.com, for example. I'll put that in the show notes below. But go to a mortgage calculator site, put in some numbers. You have the idea of what's selling in your area. Put the mortgage in, put the interest rate in that you kind of assume that you're going to get, and then spit out the numbers, see what that monthly payment is. If that monthly payment is $1,000, for example, and you're paying rent currently of $800, do the math, go 1,000 minus 800, take that $200 every month and put it into a savings account at the minimum. That way you know that before you get this house, you're actually making the mortgage payment in the meantime. You're putting that $1,000 away and it's dedicated to what it's going to be when you finally buy the house. It's kind of a quick hack to get you ready to see if you can actually handle the mortgage load when you go to buy that property. If you can do it before, no problem. Chances are you'll be able to do it after, and you're just setting yourself up for future success. So I know we just went through a lot right there, and it's a challenge to save money for most people. I myself need to get better at it in certain areas of my own life. I like going out to dinner, to restaurants, and eating with friends and family. The experience of that is great. I enjoy it so much, but it does cost a lot of money. That's my personal struggle. What do you guys struggle with when it comes to saving money? I'd love to know. Leave me a comment down below, and I'll check in with you guys later on that one. Okay, so the reason that we're doing all of this saving, this grinding, this delaying gratification is to get that down payment together, because that's the tool that you need, that what the banks want to see, that you have the money in your account to actually afford the down payment on the home. These can range anywhere from 5 to 20% in most cases, 5% being only for your personal home. Anything under 20 actually is a personal home only. It can't be used as a rental space. Anything that's 20% down and above, you can use for your own home. You can buy a rental, condo, whatever you want to do. 20% is that magic number. And if you're thinking about going in and buying a home with only 5% down, here's something to consider. If you do this, the banks are going to charge you what they call PMI, or private mortgage insurance in the States. It's called default mortgage insurance in Canada. It's the same thing. Basically, what they're saying is that since you don't have enough skin in the game, that 20% magic number, they want some insurance in case you default on the mortgage payments and they have to recoup their losses. So what does it look like in actual dollars and cents to you? It's basically just an added charge tacked onto your mortgage, and you pay it off over the course of the 25 years. Or you can choose to pay it up front in cash, which, let's be real, if you were going to do that, why not just put that money that you had in cash into the down payment and save yourself the hassle of paying the PMI, the default insurance. In terms of what the numbers of the PMI and default insurance is going to be, it depends on the house price. It depends how much you're actually putting down. The closer to that magical number of 20% that you put down, the less the actual PMI charge is going to be. The closer to the 5% or 5% that you put down, that's going to be a higher default mortgage insurance charge on your account. And again, if you put that 20% down, you don't have to worry about it. But as you go from 20 down to 5, the amount they're going to charge you is more because there's greater risk on their end. So let's say in our scenario, you're going to actually put the 20% down, which is great. You guys have no worries about mortgage insurance. That's not going to be an issue for you guys, but you need to know where to put the money in the meantime. Well, let me tell you, not in the stock market. If you guys are going to go and buy a house within the next, I'd say even 5 years, the stock market is a very unknown beast sometimes. The cycles can rapidly shift, and I would opt myself for a high interest savings account. That's where you put your down payment. You can go put in the stock market, but there's a chance and there's a risk then of you potentially losing that money and losing out on home ownership, which is what we're trying to do here. If this is something that you guys are actually thinking about doing and taking that down payment and putting it in the stock market until you're ready to buy, just to make that money work for you even more and be really aggressive with it, check out this video here. It goes through the pros and cons, the good and bad of investing in stocks versus real estate, and I'll just give you some ammo and some things to know before you go and invest that big amount into the stock market. So now that we've grinded through the process of saving for a down payment, you guys have gotten it together, you guys know the default insurance, you guys know how much you're going to put down on your house, you have an idea of what house you want to put it down on. The next step is to get all the paperwork in order before you guys actually go to purchase, so that you're not caught off guard and you're not hunting for documents at the last minute, which can be super stressful. Trust me, I've been there. Not a place you want to be. Let's take care of everything beforehand, give you a list of paperwork you should have on the go, ready to go, and you guys will walk in there, put those forms down, email them, whatever, good to go, let's do this, sign on the dotted line, you're done. Now, likely the first document that your bank or lender is going to want to see is your tax return from the previous year and maybe 2 years back. It depends on what the banks have and their regulations, but most of them want to see this because they want to verify your income, number one, and verify that you're making a consistent income over time. If you guys are jumping in and having a crazy year here and you fall off a cliff in year 2, the bank's going to get leery at that and say, well, this income isn't consistent. That's a bigger risk for us. We have to kind of do a little bit more background digging about if this person can qualify for the mortgage. So tax returns on that list. Next thing up they're going to want to see is a letter from your employer stating the date of your hire, your rate of pay, and your position, just to give them, again, peace of mind that you're actually actively employed. And it has to be from a current date. You can't get it back a year ago and then give them the same one. They're going to want a different date on it saying that it's a current and active letter of employment. On top of that, you're going to need a couple pay stubs, maybe 1 or 2 pay stubs of the most current pay period. Again, just to confirm that the income's still coming in. And then even on top of that, they're going to want to see it going into your bank accounts. So you might be able to produce 1 or 2 months, maybe they'll ask you for up to 6 months of bank records, just showing that those deposits are going into your account, you're getting paid as you're saying you're doing, and there's not a lot of cash infusion coming into your account. When they see that, they kind of notify and signal like, oh, where's this excess cash coming from? Is this a side business? Is this being reported somewhere else? What is the source of this business? Maybe the parents are putting money into your account, you're going to take it out afterwards. We don't know where that's coming from. They want to be able to see, again, consistency. From there, it's always good to have a copy of a driver's license or your passport, something that shows you and identifies you as who you are and who you say you are, just to give the banks, will ask for that, just a little piece of ID to confirm your identity, and they can move along the process easier that way. And this is all the kind of stuff. I know there's a lot, but if you have all this stuff ready to go and documented well, and when they ask for it, you can say, okay, here's the email, here's all the attachments, send it over, let them do their thing. It makes the whole process so much easier, and you're not hung up on these little details when you're trying to get the overall goal of buying that house. Again, I know we've covered a lot of material so far, and I'm telling you it's worth it to go through the process and buy a house. Check out this video here for the benefits of real estate investing and why I think it's such a powerful wealth builder. And I think it can be the same thing for you if done right and done responsibly. You guys are now well prepared to go and buy your first house. You have the down payment together. You know we're going to save that down payment. You know the documents that the bank wants from you. But there's this one secret bonus step that can save you a ton of money over the long term of owning that property if you just put a little bit of effort into it and get it done right. And this is what it is. Check your credit score before you go to apply for a loan or for a mortgage. See if you can increase your credit score. The reason to do this, the difference between a lending rate of even 1% makes a huge difference when you multiply it out over 25 years. You may not think that 4% versus 3% matters, but changing your credit score and getting it up there to get the best rates possible makes a huge difference over time. This is what I'm talking about. So let's start with a rate of 3.5%, and I want to make sure I get the numbers right here, so let me just double check here. Okay, 3.5% on a mortgage of $200,000 over a lifespan of 25 years. That's going to be a monthly payment of roughly $999 per month. Over the course of that hold on that 25-year period, you're going to end up paying the lender or the bank about $99,000 in change in interest payments. If we take that and compare it against scenario B with a rate of 2%, the numbers drastically change. If we go a mortgage amount of $200,000 at 2% rate, the monthly payment becomes $847. And the total interest payment over that period of 25 years becomes $54,000 in change. Do you see the difference? The numbers just don't lie. Not only are you having a monthly difference in your payment of $152, over the course of 25 years, you're saving $45,000 in interest payments alone, just by having a better rate, just by having a better credit score. Now let's say we take that $152 difference in monthly payment between the two rate differences, and we put that in a stock account over time for 25 years. So every month we're taking $152, putting it into an account that's earning us, let's say, a benchmark of 5% per year in interest. So our growth is compounding over time, and doing that every month for 25 years is going to leave you with a staggering amount of money. You're going to end up with around $89,000 after that 25-year period, which means you would have contributed about $45 and you'd have made $43 in interest compounded annually just from investing that money. And remember, you just have the money because you made a small change to your credit score, bumped it up a bit, and now you have monthly savings that you're using to invest, and that's called having good financial sense. If you guys want to know your credit score, most banks now have apps where you can have a little credit score check and it'll give you a ballpark estimate of where it is. You can also go to a site like Equifax.com and order a credit report. You pay a little bit of money, but you get the actual number of where you're at. The easiest way to improve your credit score is to pay off your debt on time. If you have a credit card bill, pay it off before the due date every month in full, and keep doing that with all your different kind of assets, your bills, your credit card, your car loan, anything like that. Pay it on time and your credit score will go up in value. It's also good to remove some debt. You can clear it if you have a car loan, a big car payment maybe. If you took a vacation last year and it's still sitting on a line of credit or something, pay that off before you go and apply for your mortgage, because having that lower interest rate by having a better credit score, as you can see, can save you money over the long term. Generally in Canada, anything over 760 is going to be a very good score and get you access to the best rates possible. But also anything between the 720 to 759 range will get you a good rate that you should be happy with, and you should be able to qualify for most different kinds of lending. In the US, anything from 740 to 799 is considered a very good credit score. If you want to get into that elite tier, you're going to have to break 800, and that's where you're getting the best rates possible for any kind of lending. But spend some time on this. It can save you a ton of money in the long run. Know your credit score, make some adjustments if you have to, and definitely put in the time and effort, because it can save you cash over the long run. So there you have it. Everything that you guys need to know about how to save for a house, plus a little extra mixed in there. So if you guys got value out of this video today, go ahead, click that big red subscribe button, turn notifications on. That way you guys are always up to date with the latest and greatest content that I'm putting out. And if you want even more from me, check me out on Instagram at The Economist. I post there daily, and it's all centered around investing, stocks, real estate, and how to make money and create wealth for you and your family. Thanks for checking out the video today, guys, and as always, keep investing in yourself.